Welcome to today's episode of the Simply Financial Podcast. I'm your host, Christopher Calandra, and Brett and I want to increase your financial IQ with today's episode. So I have with me Brett DiPasquale from the team here at Elliott Wealth Management, obviously on the show routinely with me and even sometimes on his own. And so, Brett, what I thought maybe if it's okay with you, we could talk a little bit about is what's going on as we enter into the second quarter of 2026, given that we have a shooting in the Middle East with the United States attacking Iran. The market's very skittish. Oil prices volatile, jumping up with concerns over what's happening in the Middle East. So, I want to get your take on where do you think that puts us today in terms of the market and macroeconomically?
Yeah, thanks, Chris, for having me. I think the start to 2026 has been wilder than either one of us could expected.
Yeah, that's true.
With the conflict over in Iran, we had the conflict in Venezuela earlier this year as well, after a pretty strong start to the market. So it obviously has investors spooked a little bit, given the basis that we don't really know how long the conflict with Iran will go on for. We don't know how high oil will get. We don't know what the resolution will be. And more importantly, when that resolution comes.
And given the uncertainty, I would submit to you that we do have negative returns in the markets for a stretch here, given the uncertainty of what's happening in the Middle East and the worry. And, we have oil prices all over the map with headline news seemingly driving prices quite a bit. So oil is up. And if you fill up your gas tank, you reflect that in your pocketbook. But I think all in all, even though it hasn't been good news for the market in the short term, the market has shown some strong resiliency and hasn't gone down, and oil hasn't reacted as badly on the upside as I would have envisioned if you laid out the scenario that's played out with the US attacking Iran. Do you agree with that?
Yeah, absolutely. I absolutely agree.
We've had, and we talked about this in the January economic update we did for clients and friends of Elliott Wealth Management, where we talked about we've been in a good bull market since October of 2022. So we've had a good run, and we're not in bear market territory as of this recording, and seems unlikely we would get to bear market territory on the S&P 500 or the Dow. But given that something probably was going to make the market struggle after such a good run, I'm glad to see that we've held up pretty well. Can you talk a little bit about, just from a long-term perspective, there obviously have been geopolitical events over the course of time, and generally speaking, how you think that investors and how we here at Elliott Wealth Management want to react to things like we're going through now?
Yeah, I think a couple of things are at play. I mean, obviously, like you said, with being in the negative returns that we are now, not too bad. But at the same time, like you said, the market's not in bear market territory. I think there's been a pretty big shift as we've seen, and we talked about this, going from some of the big growth companies that have been driving a lot of growth over the past few years to a lot more value-oriented companies. Investors are seeking more safety in traditional companies that bear more strength or seemingly bear more strength. So we've seen a rush to those type companies rather than some of the more speculative companies that have produced a lot of the market growth over the past few years.
I have always taken pride, Brett, and shared this with the team at Elliott Wealth, as well as clients and people I've met in my business life, taken pride in, reading and listening and consuming to a variety of different viewpoints on various matters. And a number of people that are decidedly negative, often because they intensely dislike the president, and maybe dislike is too soft a term, are beginning to talk about recession, that this all can trigger a recession. at this point in time, how would you characterize that type of prediction?
Yeah, I think a recession is an overreach. But I mean, also that's playing off of client emotions. I mean, we're in a very politically divided country, also a very emotionally divided country too. When, as you alluded to earlier, you turn on the news and a lot of these headlines are what's driving people's sentiment. And a lot of those talking points are what we're hearing. But as far as getting down more under the level of just those surface commentaries, I think that overall, our hypothesis for the beginning of the year of being optimistic of where the market ends this year still has a very good chance of becoming reality. Um, Depending on how long the conflict goes, how it gets resolved, we have to remember we're still in a midterm election year. And as much as you don't want to think that the market is driven by politics, at the same time, we have to recognize that with elections comes some politicization in there as well. So it could be a benefit coming into the fall.
I think the recession talk is premature. It could happen. Lots of things could happen though. So to focus on one negative uh, is, I think what did you say? Just an overreach. That seems to make sense to me. It is fair to say though that elevated uh, prices at the gas pump, if that continues over the mid and long term, that would change my outlook and many people's outlook on inflation. And that probably is not a good thing politically for the Trump administration relative to the midterms, but also for the economy and by extension, the stock market, because our outlook for the Federal Reserve and interest rates is likely to change. So that is a worry that oil prices stay elevated and make inflation more of a thorny issue than it was already. What do you think about that?
Yeah, and humor me for a second and let me put on my tinfoil hat for
Yeah,
a couple
I
seconds.
like that.
So with gas prices, obviously gas prices hurt and hit families the most because it's an everyday item that they need to go buy and they see prices rising ever so rapidly. But we also have to remember that as oil prices go up and gas prices go up, the two aren't necessarily correlated to each other. Because while they're a rocket ship going up, and I'm speaking of gas prices, it's a parachute coming back down, really slow, steady, and it's not exactly correlated with how oil is. So we have to remember too, potentially some of those prices are being driven mostly by it's sentiment based. It's much more of an emotional thing rather than a dollar for dollar increase or decrease.
I think what you're saying is correct. And the reaction at the gas pump is over exaggerated relative to the price of oil. And I'm not going to throw around the term gouging. I know some politicians will want to intercede and talk about how bad the oil companies are. With that said, though, it seems like gas went up at the pump before the first bomb even landed in Iran. Yet when the price of oil goes down, the gas pump is way, way slower to react on the downside than they are on the front end of things. And that I think is a little problematic for the American consumer and what we're dealing with. And that's a little bit worrisome because you are right. With what's happening with oil, doesn't necessarily have to affect gas prices as much as it has. Sentiment is driving it, but if that doesn't change and gas doesn't come down quickly, irregardless of what I expect will be a future decline in prices, that really messes up a lot of my assumptions about how things might play out this year.
Yeah, that's very fair.
Yeah. And on the positive side, there is a chance that we as a country have success in Iran. That could be defined in a lot of different ways. Obviously, there's the nuclear weapons component of it, which is central. However, if we could, through this action, end up with a tamer Iran, maybe regime change, maybe just a declawed regime that is less of a danger in the region and doesn't have the weapons to back up bad intentions. And if we could keep the oil flowing through the Strait of Hormuz for the long term, then you could end up with a situation where America and its allies in the Middle East are safer, and price of oil moving forward would be less than it otherwise would, because there was always an element in the price of oil that was factoring in the vulnerability in the Strait of Hormuz, which is where lots of the world's oil flows through, and Iran's ability to mess with that. If that all goes down, we could have a success such that it leads to a spike up in the markets, and all of these worries will be in the rearview mirror, and we might be off to the races. That's a positive potential outcome that I don't think is outlandish. What's your thought on that?
No, I don't think so either. And I think there's a comfortable price of where oil should be based at. That's still that would give the opportunity for oil companies to go out both profit and also give them opportunity to go explore even more, to drill even more. So I think that there's a good common ground where the American public can see it at the pump, see it in the stock market, and it's good for everybody in the world involved.
All right, very good. Well, thanks for chatting with me a little bit formally. I know we talk informally all the time. Formally on the show, listeners, if you want to find out more about Brett and myself and the work we do here at Elliott Wealth Management, please check out our website. That's elliottwealth.com. That's two L's and two T's. You can even at the site sign up for a free consultation, and we would love the opportunity to speak with you. So thanks for listening today. We will be back with you on the next episode of the Simply Financial podcast very soon.
The views expressed are not necessarily the opinion of Osaic Wealth, Inc., and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Please note, the information being provided is strictly as a courtesy. When you link to any of the websites provided here, you are leaving this website. We make no representation as to the completeness or accuracy of information provided at these websites. Nor is the company liable for any direct or indirect technical or system issues, or any consequences arising out of your access to or your use of third-party technologies, websites, information, and programs made available through this website. When you access one of these websites, you are leaving our website and assume total responsibility and risk for your use of the websites you are linking to. Securities and advisory services are offered through Osaic Wealth, Inc., member FINRA, SIPC. Insurance services offered through Elliott Wealth Management Services, LLC, not affiliated with Osaic Wealth, Inc.